Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Tuesday the 31st of August. Now markets are still responding to this speech by Fed Chair Jay Powell on Friday. The Federal Reserve Chairman was at the Jackson Hole Economic Symposium giving a speech, and markets had been thinking throughout the summer that this was going to be the venue that Fed Chair Powell was going to be laying out the timelines for tapering asset purchases by the Federal Reserve. He didn't do that. He was very cautious, and that caution has meant that there's been a key market reaction. The dollar has weakened. We've seen treasury yields falling, and we've seen risk appetite moving strongly higher again. We've seen equity markets breaking to all-time highs, certainly on the SP 500 once more. And it's a really strong reaction that we are still seeing continuing today, and it could well be that that continues at least for the coming sessions, at least until the non-farm payrolls report on Friday. So with that in mind, we've still got the manufacturing and services PMIs throughout this week. The first trading week of the month is always a jam-packed week with economic data, and we've got that later this week. But today we're looking out for the Eurozone inflation numbers. Eurozone inflation is expected to spike back higher again, and we could see a reaction through the euro on that. And also we're looking later on the US consumer confidence numbers. Confidence is expected to fall back. So that could well play into this current move that we've seen, certainly through Eurodollar, for example, pulling strongly higher. So the charts I'm looking out for today are starting off with Eurodollar, where, as I said, Eurodollar has moved significantly higher. It's moved through a key resistance at $1.18 and is now targeting, or certainly looking at, the next key resistance around 119 big figure. Gold is a similar looking chart. It's broken through a key resistance and is also now looking towards the next key upside level. And we're looking also at the S&P 500 futures, another key move to all-time highs. But how is the resistance looking, and is there any entry points that we can identify on the chart? So let's have a look. So onto the INFINOX MT5 platform now, and just starting off with the dollar index, where just showing how the dollar has weakened in the last few sessions on the back of that speech by Fed Chair Powell, and it's coming back towards the first real level of support around the 92.40 area. So if you equate that to the euro-dollar chart, we've seen euro breaking higher, strengthening on that weakening dollar, and the move through $1.18 has been the first real time that we've seen the euro-dollar chart breaking above a key lower high, and that means that there's a changing outlook, and you can see that break of the downtrend. You can see the move above the moving averages. We can also see the improving momentum as well. The RSI, the relative strength index, up around multi-week highs, highest since June, and we've seen that that is now starting to develop a recovery. The move above 118, that now becomes a basis of support. So 118 down to 117.35. It's a key area of support now for Eurodollar. Looking towards 119 big figure, but as I said, I think non-farm payrolls could be a key aspect here for Eurodollar, but certainly in the time being, in the next few sessions, we could see further gains. Gold is a similar looking chart. It's broken the downtrend. It's also started to develop higher lows and higher highs. It's moved above 1810, which was a key reaction high. So that now becomes a basis of support. So 1810 down towards sort of 1800, maybe even 1790, you could argue, is now supportive for the gold chart. It's not really decisively broken higher. Yesterday was a little bit of a reaction lower. Positive risk appetite doesn't tie into gold moving strongly higher, but we can see that the weakening dollar does, and that's why we've seen gold creeping higher. But you can see this overhead resistance, 1830. I think that's a massive barrier there for gold, and that would really need to decisively move through that resistance to suggest that the recovery in gold is really developing. For now, you'd say a mild sort of upside bias, but it needs to get through that resistance. And finally, S&P 500 futures is just relentless. It has this couple of days, 3-4 days of downside, and then moves to the upside. Well, on Friday, we saw that the strong bullish outside day, an uptrend, you wouldn't give that too much, but I think it still is a strong signal that suggests all-time highs are continuing, buying into weakness, and you'd say that the support area of 44.60 up towards 45 4,500 is really good line of support. Now, you do have strong momentum, a little bit stretched. You'd be arguing maybe a little buy into weakness would be preferable, but still continuing the trend higher, higher lows, higher highs, just strength all over. And I think until the Federal Reserve really decisively moves to taper asset purchases, I don't think you're going to see that this S&P 500 changes that outlook. So thank you for watching this video. I hope you found it informative for your trading. Join me again tomorrow where we'll be looking at how these manufacturing PMIs are going to affect the outlook. So I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.